So, what is speculation in the stock market? Is it the same thing as investing? Let's see what these two terms mean and if there is any difference. Hey, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. As I said in previous videos, investing is really crucial, especially in this era. But to do that, we firstly need to know what investing is. But first, let's see what speculation is, because I see many videos talking about speculation and the difference between speculation and investing, but I'm not quite in agreement with those videos. So I want to talk about speculation and then see if there is any difference between speculation and investing. But hey, before we start, if you enjoyed the video, leave it a like and let me know in the comments down below what are your thoughts on speculation and do you see it as a different thing than investing? So what is speculation? Well, speculation is just a projection or a guess, even though I don't really like that term, that you make in the future of something happening. So in other words, it's just to form a theory that says that something is going to happen but without a firm evidence. And because it's in the future and because there is no firm evidence, that means that it's uncertain. So it's fundamentally uncertain. So for example, if you go on your weather app and you see that tomorrow is going to rain, that means that someone speculated on the fact that tomorrow is going to rain. Now, is speculating investing? Let's first see what investing is with an example. So I buy a stock. What does that mean? That means that in the future, I think that same stock is going to raise in value. So it's going to increase its value and it's going to increase its price so that I can make a profit. Do I know for sure that it's going to increase its value? Of course not. So if we consider this, we can call investing speculating. And if I buy a stock, I'm speculating on the fact that in the future the price is going to increase. But why investors don't really like to use speculating as investing? The reason is to search in how people use the word speculating and how they think about it. Usually people think about speculation as a bad word. That's because normally it's associated with a high level of uncertainty or a bet. But that's not really the case. The word speculating or speculation is nor a bad or a good word, it just is. It's the context where the word has been put in that makes it a bad or a good word, but not the word itself. And in this sense, we can talk about the levels of speculation, considering uncertainty. So if speculating means to guess that an event is going to occur, that means, as we already said, that there is a level of uncertainty. And so we can pretty easily say if a projection is highly speculative or slightly speculative. So if I make a guess that it's based on a thorough research, the level of uncertainty is going to decrease, and so the level of speculation is going to decrease. But it's still a speculative projection. It's still speculation, just a little bit less. So let's make an example with the stock market. If I found a stock and I think it might increase its value, I can decide to make a thorough research on the company. I make a detailed analysis, technical and fundamental analysis, and I come to the conclusion that the price of the stock might increase its value in the future. So I decide to buy the stock, and I can say that after my detailed research, the level of uncertainty has been dramatically decreased. So my projection is not highly speculative, but it still is speculative. It still is speculation because the level of uncertainty is there. On the opposite side, if I go to the casino and I decide to play roulette and bet on the fact that the next number is going to be red, the level of speculation is really going to be high. That's because the level of uncertainty is going to be high. And that's because there is no research in order to prove that the next number has a high chance of being red, because it's usually even less than 50% if we consider 0. And there is no research that I can make in order to guess that the next number is going to be red. And so the level of uncertainty is going to be high and the level of speculation is going to be high. And so that's not a good way to to invest your money. Another thing that can lower the level of uncertainty in the stock market is time frame. If I decide to invest in a short-term way, such as day trading, the level of uncertainty is going to be high. On the opposite side, if I decide to have a long-term investing perspective, my level of uncertainty is going to decrease, and so the level of speculation. That's because generally, in many years, the stock market is going to increase. We can prove that by looking at the indices like the S&P 500, the Russell 2000 or the Dow. And I'm not saying that all stocks increase no matter what. I'm saying that generally the stock market increases in its value on a long-term basis. So to sum up what we just said, investing is speculating, but we can have a highly speculative investment or a less speculative investment, and that depends on various factors. And so investing is basically speculating on the fact that a stock can increase its value if I buy it or decrease its value if I sell it short, so that I can make a profit. And these were my thoughts on speculating and investing. If you enjoyed the video, leave it a like and let me know in the comments down below what are your thoughts, and do you consider speculating as investing? And I'll see you in the next video. So is it really easy to make money in the stock market? Let's answer this question with an example of $342,000 lost. So this is a person who lost $342,000 in the stock market from an initial capital of $474,000.